You hear all the time about how well the Texas economy has fared in recent years, but that success isn't just contained to the Lone Star State. It extends north to Oklahoma City, where the economy is thriving and the apartment market is doing quite well. Welcome to Apartment Market Dynamics from NPF Research. I'm Jay Parsons with your Oklahoma City update. Oklahoma City shares a lot in common with Texas besides geography. The energy sector has played a big role in the area, and they have two very large energy companies in Chesapeake and Devon. It's a young city. The median age is just 33. Its population is growing, and so is its workforce. Take a look at this chart showing annual job change by quarter. OKC didn't take a big hit during the downturn. It has recovered quickly, and lately it's been adding jobs at a good clip. For the past year, Oklahoma City was a top 10 performer nationally with job growth of 2.7%, and that amounts to more than 15,000 new jobs. And in the bigger picture, when you look at what metros have added the most jobs since the start of 2008, just before all those layoffs began nationally, Oklahoma City, 7th in the nation with a net job growth of 3%. The only other non-Texas metro with more growth was Pittsburgh, which is another region that's benefited from the natural gas boom of recent years. So with all that economic growth, OKC's apartment market has been able to sustain some consistently solid revenue growth. Take a look at this chart showing annual rent growth in OKC versus the U.S. average. Oklahoma City is in purple, the U.S. in red. And you can see that Oklahoma City didn't cut rents nearly as much in the downturn, and it raised rents quicker coming out. And it pretty much evened out over the past year, but it did come in on top as of Q2, 4.8% in Oklahoma City versus 4% for the U.S. overall. But even with that gap narrowing, it's still notable because we've generally seen a lot less rent growth in smaller markets than we have in larger markets. For simplicity purposes, we label the 50 largest markets as primary markets and the next 50 largest markets as secondary markets. And of the largest 50, 21 of them saw annual rent growth of at least 4% in the past year, but of the next 50, just 7 did. And Oklahoma City was one of them, 4th among secondary markets nationally, behind only Grand Rapids, Michigan, Harrisburg, Pennsylvania, and Corpus Christi, Texas. And in Oklahoma City, solid rent growth has been widespread among submarkets and product age groups, even those areas with some weaker occupancy rates. And speaking of occupancy, again, we see some similarities with the Texas markets, extreme bifurcation by product age group. We'll get to that, but let's start with the overall occupancy numbers. You can see that we've seesawed a bit in recent quarters, most recently down 70 basis points quarter over quarter to 93.6%. Not great, but that is roughly in line with Oklahoma City's long-term norm. Now take a look at occupancy by age, and the story is very apparent. Occupancy is full in apartments built in the 2000s, the 1990s, the 1980s, all above 95%, but still weak, as it usually is, in apartments built in the 70s and earlier, 91 to 92%. And a quick submarket highlight to close things out: in-town, Bricktown, very strong numbers. Occupancy holding strong, 95.8%, and effective rents for new leases jumped 10.1% year over year. Now, unlike Texas, we haven't seen much of a spike in apartment construction. Pretty limited so far. So in Texas, we're expecting revenue growth levels to start to ease as we start to see a lot more new supply coming online. But without much of that to worry about, plus a strong economy, Oklahoma City's apartment market could maintain this momentum going forward through 2013. So that wraps up for Oklahoma City. So until next time, for Apartment Market Dynamics and NPF Research, I'm Jay Parsons. Thank you for watching.
Want more? Go deeper with NPF Research's apartment market reports. From a national level, down to individual metros, to specific neighborhoods, NPF Research has been providing unparalleled apartment market intelligence to the multifamily industry for almost 5 decades. Learn more by contacting us at 877-284-4938 or visit www.npfresearch.com and click on Market Reports.